Hey guys, how's it going? Welcome to the London session recap for Euro Dollar on Thursday, the 18th of August, 2022. So, daily chart, as we know, is pretty damn simple at the moment in terms of we have this large bearish swing range and we have pulled back up to the EQ of the swing leg and we've mitigated this daily supply range. So there's, a pretty decent amount of probability that the swing pullback is now over and we're ready to take out the swing low. However, what are some more sort of mechanical frameworks that we use to help guide us with that and to give us true confirmation? Well, we can look at the internal structure. And as we can see, the internal structure on the daily chart is still currently bullish. So there is some possibility that this reaction from the daily supply range was simply just to facilitate that internal pullback, right, down into this strong internal low. And then potentially we could see the continuation of that swing pullback, right, up to more premium levels of supply. That's always a possibility, okay, that price could just mitigate the demand in here and continue to the upside. Obviously, that becomes lower probability that we're going to keep staying bullish once we pull back up to a premium level, because once we mitigate premium supply, right, that's when there's a high probability that the continuation of the swing trend will continue. So we have to always be, open to both possibilities in the market and try and obviously piece as much confidence together as possible to try and form somewhat of a bias, primarily looking at the lower time frames too. So with that said, we have had a bearish change of character. We've obviously sold off with a decent amount of momentum. And on the lower time frames, it does kind of look like we're just pausing to potentially then get that bearish IBOS. And once we have that, then we have true structural alignment because the daily internal structure will then be bearish. It's realigned with the daily structure, right? And then we'll look for the continuation of that movement there to the downside. But at the moment, we're kind of just in that tricky spot because this is where demand is holding price at the moment and there is that possibility we could continue up, or maybe we're just pausing for a minute, absorbing that demand, and we're ready to smash down. So this is where it's not super clear just yet, which we can visibly see here on the 4-hour chart, where similar to the daily chart, we had the internal structure shifting bullish to facilitate that large swing pullback up into premium levels of supply, and then we sold off pretty damn aggressively. However, the internal structure is still bullish for now because we have not broken and closed below the 4-hour strong internal low. So again, there is still that possibility, right? If we keep following structure, that we expect that strong internal low to hold and potentially continue that movement to have that deeper swing pullback. But like I was saying on the daily chart, this is when you have to use some nuance and understand, well, why did the 4-hour internal structure shift bullish? It shifted bullish to actually facilitate that pullback. But now we've come up into premium levels of supply, like on the daily chart. Well, maybe that, that's its objective is complete. If its objective was to switch bullish just to facilitate that pullback, and now it's likely that pullback is finished, well, now there's an increased probability that the 4-hour internal structure is going to shift bearish, okay? But obviously we don't know that until we actually get that confirmation, which we don't have just yet. But, when we look at the bigger picture, we can see how aggressively we sold off, and now we've kind of just had quite a corrective pullback up into this level of supply. My gut feel is saying that it's more likely we probably are going to switch bearish. Yes, we have had a bullish chock, and that gives somewhat of a decent signal that this low might be holding. But that for me is not that convincing, right? Typically what we'd like to see is a bit more of a clear pullback like this. This low then holds, and then we see like a clear small IBOS there. And then we have like alignment, right? Because that large internal pullback is finished, and then we can expect that movement. But we don't really have a lot of structure to work with here. In the 4-hour leg, it's kind of one push. Maybe that's a pullback there. So like if we got a break of that high, then okay, we can start to think. But yeah, for now, it just looks like an impulsive down, a bit of a corrective pullback into the supply level to potentially continue to the downside, right? And that's why I think we just had a bullish chock there, was just to pull back into this level. So I'm open to both possibilities, really. I don't see anything just clear just yet. We're just correcting. So basically looking for sells from this 4-hour flip zone. To potentially continue that move, right? We can see price came into the demand here, reacted and pushed down. So not the best 4-hour zone in the world, right? It's kind of just one movement, but it's still valid. So looking for sells from within here to potentially try and capture that move if we do switch bearish. But even from here, I'd still be pretty aggressive with my profits because you're trading straight into, well, the 4-hour strong internal low. You've got 4-hour demand, etc., etc. There's just nothing really here that I'm that interested in just yet, right? We either want to see this supply starts to get cleared out and then we can look for these movements, or we want to wait for that 4-hour break of structure, right? And then we can look for the pullbacks and trade those bigger moves. For now, it's kind of just, it's just ranging. There's nothing that clear for the immediate bias. And that's all we really kind of have to dig into there on the on the 4 hour, and then the M15 again. I've spent a lot of time on the last couple of trade recaps for the last few days of this week, kind of going through this, and we can overcomplicate it, or we can keep things pretty simple. I try my best to keep things simple. I am guilty of overcomplicating things at time, right? So we do have this swing pullback here, and I view that as one swing leg to the downside. So now we have our M15 swing structure here. We then had the internal structure shifting bullish to facilitate that swing pullback, right? And then we had that breaking closure up above yesterday, giving us our new internal range here. So I did label this slightly wrong in the pre-session analysis as I had the low there, but it should be down here, okay? So this is how price action looked coming into London. And for me, it's just nothing I want to trade. One, delete your analysis, right? You can just hide it here. We're bang in the middle of this range. So we always know that's lower probability to be trading in the middle. That's where everyone's getting chopped around. But two, let's just, think about it again. We've got the bearish swing range. We've pulled back up into 4 hour. We haven't quite hit the M15 supply. So there's a possibility, right? We could pull back and come up higher. But ultimately, this is where, if this high is going to hold, it's probably going to do it from this level. So we can start to think that movement's going to go. But we're just sandwiched between demand and supply, right? It's just not really clear at all. So at this point, okay, if you want to follow the large internal structure, well, we have that higher high, higher low, and higher high, and you could go, okay, well, maybe now we're pulling back to do what? To pull back into this strong internal low to facilitate the demand, or to fill the demand from within here, right? And then we're going to get that next movement, at least up into this high, potentially higher. So you could look to play that, right, to try and capture that large internal high low, but is that high probability? Considering one, it's against the swing trend after mitigating 4 hour supply, another strong high. No, not really. Two, there's no unmitigated demand in here, right? Yes, there's a wick here, but that's not unmitigated single candle pivot demand, right? You want to be sticking to those clear cut zones like this, where it's a single candle unmitigated pivot zone, not this mess from within here, right? Stay away from this. That's kind of what I'll say for now. I mean, there is demand here, which I marked out on the pre-session analysis, but it's not demand I'm interested in, right? It's just this messy range. It's super corrective lows below it. There's no inducement in the leg. It's in the middle of the range. I have no interest in trying to buy this, because what are you trying to buy? Well, you're trying to buy the large internal structure shifting bullish, but is it likely to continue bullish when we've just had this mitigation from this level? This is just the middle of the range. This is nothing I have interested in trading. So you can follow it and you can draw it out, but is it something I want to risk my capital on? Not so much, right? So again, there was a chock here, a bullish chock, right? And potentially you could have looked from that level of demand there. Let me just draw it on. Get the bullish chock here, okay? But you have to remember, just talk through this in a sec, just get it drawn on there, that what does a chock signal? A chock signals the end of an internal pullback potentially, right? But in this instance, we have the large internal structure, right? And if you're looking for that higher low to form, well, in this instance, you have the small internal structure that shifted bearish to facilitate that pullback. So if you want to signal that that large internal higher low is in place, you want to see this high go, right? You need to see that bullish II boss, right? You want to see the small internal structure shift bullish. So at this moment, when you just get a small chock like that, all that chock signals is the pullback of this leg here. So from this high to this low, right? That chock, all that signals is that chock is that pullback is starting. Okay, let me even draw it on, maybe map it a little bit clearer. So we have the small internal structure here. Okay, we can use green dots for it. And what I'm going to do as well is I'm just going to get rid of supply and demand here, just so you can focus on structure, because that is literally what matters at the moment. Nothing else. I'll put the high here. Right, so at this moment, let's bring it back a bit. When we get the bullish chock here, okay, yes, that's the first sign that the internal large high low could be forming, right? And we could be ready to take out that high. Like if we forget everything else and we're purely just thinking about the framework for structure, let's keep it nice and simple, right? We're within this large bullish range. If we're just following the internal structure and we're expecting an internal high low to form, if we're expecting the large internal structure to stay bullish and target this high, okay, yes, we have a bullish chock. And yes, that's the first signal that potentially the high low is coming in, but it's not what we use as confirmation. All this chock signals for me is that we're getting a pullback of this leg here, right? Because we have the bearish small internal structure here, And that's all that chalk signals is. Now we're potentially getting a pullback into this level, and then we can come out down lower. It's only when we get this green structure shifting bullish that now we actually have true structural alignment, where the small internal structure is realigned bullish with the large internal structure. Okay, now we can start to think that high low is in place, and we're going to target that high. So when you use that knowledge and you understand, one, this is a rubbish POI, it's in the middle of the range, it's super corrective, no inducement, like this is nothing. All this is doing is a reaction to facilitate most likely this pullback into this level to continue dumping down lower, especially when you look at everything else. We're coming off 4 hour supply, the M15 swing trend is bearish. Like we initially failed to break above that high, that's quite a bearish sign, bear stepping in. Again, we have another high here, price failing to break above that high, stepping in. Like there's so much bearish confluence here, it's all super corrective, right? That's when you go, okay, this is not a scenario in which I want to get in early long against this structure. Especially, again, if you want to look at order flow as well, this is essentially your supply range, okay? And price is just putting back up into this level to mitigate it and continue down, right? And that's why we continue down. Again, we get another small bearish IBOS there. Well, not yet, but in a minute as we come down, okay? So again, you can keep, if you visualize the order flow, maybe that helps you, right? And what you're looking for, if you want to see confirmation that this low is going to hold, is ideally you want to see that break bullish, and then we would expect that, right? Because this is our new small internal high. So can you get in long from here? Again, maybe let's just forget about the current market conditions, but purely thinking about like trading decisions of like how you want to incorporate this into your framework. Like, can you get long against the small bearish internal? If you really want to trade and you want to think this large internal high low, if you think this large internal strong low is going to hold, right? Just in kind of general circumstances, you wanted to trade from the strong internal low. Do you have to wait for the small internal structure to shift bullish to get long? No, of course not. But you need to make sure that risk to reward is on your side. So the first approach is that we have a nice unmitigated M15 pivot POI demand here. Okay, if price comes in and gives you your M1 entry model, yes, you can get long before there's even an M15 chalk or an M15 IBOS. If you have the risk to reward at least up to the nearest M15 level of supply. Like if you can get in long here before we pull back up, okay, fine, maybe that's a trade you want to take, right? That would be like the first way you could get in. But at a bare minimum, you want to be trading from unmitigated M15 demand. You need that's what I'd recommend to nearly all of you. Only do this when you have a single candle, unmitigated M15 pivot demand. In this case, we have a wick. Yes, it could have played out, but for me, it's just nothing I'm interested in. That's why I didn't draw it on my analysis. This just is not good enough demand in this current scenario to want to trade from here. But let's just imagine that there was a beautiful M15 extreme demand candle here. Okay, price comes in at this moment. Yes, if there is an M1 entry model, then yes, you could look to get involved. But my recommendation is only do it if you can get in and there's enough risk reward, at least 5R up to that nearest M15 supply zone. Because at least then you can remove your risk and or take profits, blah, 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 blah. Whereas if price comes down here, gives an M1 chalk, right, and moves up and you set your entry, but you're not tagged in, then it comes up and mitigates M15 supply. Well, now you're trying to trade against that. The only reason why the M1 chalk bullish in that instance is most likely just to facilitate that pullback up to this level. Now the objective is complete and price is coming back down. You're trying to buy from this weak low. It's a weak low because it's failed to do its job. It's failed to break anything, right? So that's when you do not want to be buying. You do not want to be buying after that M15 supply mitigation when obviously like this supply is still in control. Okay? So that's kind of your first scenario. Again, if we had M15 demand we wanted to trade from, which we didn't, you could jump in on an M1 entry model and at least try and play that pullback, and then you can remove your risk. Other option is you wait for at least an M15 chalk. In this instance, it'd have to be up here, but let's imagine we get a little bit of a pullback, then price comes down on the M15 and then gives us a chalk. Well, this is kind of better because now you have fresh M15 demand to work with, especially in this instance where there isn't demand that I would say you want to use. At least then let's see if the wick's going to hold. Wait for an M15 bullish chalk. Okay, now that gives you fresh M15 demand here. So at least now you have a single candle M15 pivot demand to work with. And in this instance, if you really wanted to trade from this strong internal low, that is what I would recommend you wait for, because this just isn't good enough demand in this instance, right? You want to wait for that fresh demand to be created. So you'd wait for an M15 chalk. Okay, so now you can look for longs, but again, only if the risk reward is on your side. How was the chalk created? And in this instance, it just looks like it was a small movement up, right? So then when you come in, you can get long because price hasn't mitigated supply yet. So there might be enough risk to reward for you to trade into. But if the chalk was created by doing this, where price pulls back, comes down, then you get the bullish chalk, right? And it comes into this supply level. Well, now, yes, you have demand here, but again, you're trading against the supply, and it's just, is that really what you want to do? Because supply is still in control in this moment, and it's likely price is going to do that. So this is what I mean by, it's just a tight range. There's supply and demand everywhere. There's no risk to reward to play ping pong in here. It's just not worth it, in my opinion. So really, well, let's play it forward and see what actually happens. That might be a bit easier to kind of talk through that. And again, you don't want to even be looking at the M1 at this stage until you've seen a M15 POI that meets your rules, that you want to trade from, that there's going to be enough risk reward from. Like, don't even be looking at the M1, because I know some people were looking at M1 entries from within here, right? If you had this as your M15 pivot or your M15 demand, right, that you wanted to use, okay, fine. But then what's happened is price gave an M1 shock from within here, and at this moment we've already come into supply, and then you're trying to buy as price is coming back down into your M1 entry against that. That is super low probability because it's just chock bullish in the M1 to come into here to continue down, right? You want to at least wait for that to be cleared out, right? So now we come down, okay, fine. Nothing's happened yet. Okay, now we have a bullish chock on the M15, okay? But again, is this where you want to be buying, right? Price is just putting in to the supply range to mitigate the supply range to potentially come lower, or at least let's see it get cleared out first, right? There's just no room within here to play. So then it comes up into that high. Now, could you short from here? Well, the expectation is that this is going to hold to continue down. But remember, the only reason, or the reason we work with, why this small internal structure, the green structure, shifted bearish was to facilitate the pullback of this range here, right? So we have the bullish movement up, and then this green structure shifts bearish to facilitate that pullback. So if we've come into this strong internal low, right, and it's holding, this is going to be the scenario in which this is most likely to break this high and switch bullish. So do you want to short from here? Me personally, no, I don't want to, because this is most likely when this high is going to fail, when this bearish order flow is going to be disrupted. Okay, so I personally wouldn't want to short from there against the large internal structure, right? And I don't even know what that brings us to now. It's around here, okay? So at this point, anything can happen. This high could hold, we could come down for another bearish leg, okay, fine. Or maybe, the demand from within here is going to hold, and then we shift bullish. But at this point, like, I don't want to be buying because we've mitigated this level, and this level could hold. So there's just nothing going on here. So if I was doing kind of just, I guess a session recap for myself, I would have just gone, well, we're sandwiched in between supply and demand. The structure's misaligned. There's not enough risk reward from here. Like, I'm not interested. And that's why for me personally, I set alert here and I set alert here, and I just went about my day, right? Working on other things. But really kind of went into this a lot more depth, just so you guys can, it's just more practice of, how we use the framework, for our interpretation. Like, if price had to come into this level, right, and then give us this small IBOS here, and then comes down, and now we have a really fresh demand level. Again, do I love this complete overall setup? No, because we're still basically just trying to trade this sideways range sandwich between 4-hour supply and demand. But that has a lot more going for it. And if you have risk to reward, then to at least target this week high, but obviously with the potential that we're expecting that high to go at that moment. Because if you get that small bullish IBOS here, you have complete structural alignment, at least with the large and internal structure, right? They're both bullish, but you have swing as bearish, which still isn't great. Okay, so yeah, when it's super, super tight, just leave it alone. And one thing I'll add, in this instance, right, what do we use chock for? Chock signals this internal pullback is happening, right, of the small structure. So if you get a bullish chock, or chock in general, that signals the start and end of the small structure pullback, the small internal structure pullbacks. So that's what chock does. A small IBOS, right, of the small structure signals the start and end of the pullbacks for the large blue structure. Okay, so that's why if this is bullish and we're looking to capture that high low, we're looking for this pullback to finish, what do we need as confirmation? We need to see a small IBOS, because that signals the end of this pullback, right? And that's how you have to think about it. And then the large internal structure, so we get a large IBOS here, that signals the start and end of the swing structure pullbacks. So if we got the bearish IBOS of this large structure, right, so if the large structure here, right, shifts bearish, now what do we have? Now we have confirmation that the swing pullback is over. Right, because that's the swing pullback here, this whole bit of structure, right, because this is the swing movement up into here. Then if we get the bearish IBOS, that signals the end of the swing pullback, right, that being the swing pullback. If we get the bearish IBOS, and then we'd expect price to eventually take out that weak swing low. So it's all about understanding what piece of structure is relevant to what structure and what does that signal. So for the start and end of swing pullbacks, you want to see that large IBOS. For the start and end of the large internal structure pullbacks, you want to see a small IBOS. For the start and end of the small internal structure pullbacks, you want to see a chock, right? So on and so forth. But yeah, so this is the type of environment where you may understand what's going on. You may understand how to read price action. You may have a mechanical framework. But does that mean the conditions are right for you to risk your capital on? Is there enough risk to reward? Is there enough confidence? Is your strike rate going to be high enough? In this instance, it's way too compact to try and play ping pong like that. Yeah, hopefully that helps. If you're a little bit confused and your head hurts, it's kind of supposed to, because this is not really conditions in which you're trading. It's obvious when everything's aligned and there's enough risk to reward to play things if they're not aligned, i.e. play the pullbacks. Don't force it when it's like this. Work on other things. Watch content, backtest, get on top of your journal, do whatever you need to do, right? Just set alerts, stay off the M1, and do not drop down onto the M1 until you have a single candle M15, like an unmitigated POI, that is high probability and meets all your rules and has enough risk to reward to trade from into the next M15 zone. Otherwise, do not look at the M1, right? Just keep your M15 chart open like this and don't have multi-chart layout or whatever it is you do. Just stay off the M1 because you'll get sucked into entries that aren't worth it. Okay, cool. Hope you guys took some value from that, and I'll see you in the next one.